Now looking at that inflation rate falling back to about 4.14%, is that perhaps an outcome you had expected? And could you talk us through some of the major drivers to this fall in inflation?
Thank you very much. I think the 4.1 print on inflation was well expected. One, because food prices have been softening. And I think the major driver for inflation going downward is food prices softening. There is also the base effect, considering like that last year the inflation number was very high, and therefore the CPI index is a bit higher, and therefore any decline looks magnified because of the base effect. And then of course we cannot forget the fact that demand side has been slowing. Aggregate demand for the economy, I think, has slowed quite a bit, and therefore overall the economy is experiencing lower prices than what we saw last year. Those are the main drivers which I can point out to the number that has been printed today.
Well, inflation currently sitting below the government's target of 9%. But talk us through your outlook, perhaps, for the inflation rate before the end of the year. There is talk, however, of fuel prices being the major risk to the inflation outlook.
Okay. I think as we come to the close of 2012, we've got 2 months to go. We may see inflation number remaining well below the 5% level. The current levels of 4% are likely to be sustained. The only factor that we think is a major threat is fuel, like you have stated very well. Fuel prices have been restated upward in the last month. We'll be seeing new prices in the coming 2 weeks, and given the global prices where they are at and the shilling where it is at, we think that the oil prices could actually edge a little bit higher and therefore give a threat to inflation. But looking at the composition of the index, fuel commodities are not largely in the index, and therefore these will be softened by the fact that other prices are going down. But also, more importantly, when you looked at the index today, we saw the food prices had a mixed reaction. There were some components of the food basket going up and others going down. I think that this is likely to be sustained. Some of the goods, softer commodities, will be rising in prices, while others are declining because of the short race that we have seen. They've been successful, but what I note personally is that the major staple commodity like maize, the prices have been trending downward. So this gives us comfort because it forms a large component, and therefore largely inflation is not a big concern for the economy at the moment.
And when you look at transport costs, we saw those going up by 1.37% to 8.66. Is this just a cyclical type of factor? Is this a once-off, or could we perhaps see further gains to this transport cost going up forward?
I think transport costs, why they went up, mainly again it goes back to our electricity bills. We saw our electricity bills adjusted in the last month by about 16% on forex charges, and that is what has filtered into the fuel and transport index. So this is likely to remain there for the rest of the year because it wasn't there last year, and therefore comparing year on year, we might see that hold or the transport index actually remain a little bit elevated.
Now looking at that inflation rate, so down to 4.14%, we do have the central bank due to announce interest rates. And what are your thoughts on the type of outcome we could perhaps see coming from the from the central bank? I had a guest earlier on saying that he sees perhaps a 200 basis points cut coming through at this next meeting.
Central bank has already achieved the target of bringing down inflation. Having achieved that, the other thing that they need to look at is the objective of sustaining economic growth at favorable levels. And I think it is on the monetary side that we need further easing of the monetary policy so that we can see credit growth. And I think coming week when the MPC will meet, we are likely to see them cut the CBR rate further down. I think there is scope to cut it even to levels of up to 200 basis points downward. But again, it is a balance between a currency that we do not want to see depreciating too much, and of course supporting economic growth at sustainable levels. So we are likely to see the governor cut the CBR by between 100 and 200 basis points. That's our expectation.
Indeed, like you say, it's all about the currency as well. At this stage, we have seen the shilling being pretty stable over the past couple of months. Could you give us your outlook for the shilling for the next 2 months or so, or until the end of the year?
Okay, yeah, you've stated well. The shilling has been stable, but the stability has been because of interventions by the governor through the open market operations. I think on a daily basis, we've seen the governor actively getting into the market and mopping a lot of liquidity, and that has meant that the shilling has held stable. And also the other thing we have seen is that the treasury bill market, the rates have been rising throughout because of the tight liquidity that has been created by the mopping of liquidity. Given those factors, then the shilling has held quite well. I think going towards the end of the year, it will be upon the governor. The actions of the governor will be very, very paramount in determining the direction of the currency. And because he holds the key to the currency direction, that it is very, very difficult. It becomes a little bit difficult for any analyst to tell you the direction, because if he decides to ease on the mopping up, then the shilling will weaken a little bit. But I think looking at all factors, a lot of things point to weaker shilling should the governor decide to support the economy in terms of GDP growth and easing of monetary policy, rather than a currency that should be strengthening beyond the levels we are seeing it at.